Alright guys, so I've been getting a lot of questions about Monday's range and how to trade it. So here's a quick example on how I trade my Monday's range. So basically what I'll be looking for when trading, when Monday starts trading, I'll mark out the high and low of Monday, and then going into Tuesday, I want to see during Tuesday or Wednesday the low or high of the week being formed to enter the optimal trade entry, targeting the liquidity above or below Monday's range. So in this case, let's put in the daily dividers. So for those of you who don't know how to put in the daily dividers, right click on your chart, settings, go to appearances, and then click on session breaks. This will put in the daily dividers for each day. So this is Monday, Tuesday, Wednesday, Thursday, Friday, etc. So if we get a big range like this on Monday, we mark out Monday's range throughout the rest of the week, and we want to see some level of confluence near either range low, mid-range, or range high. So in this case, we swept this low and we had a big surge up. So our bias was bullish. So we want to be entering at a discount. Remember the previous lessons. So we want to be entering at a discount, and we want to enter at a bullish OB or a breaker, whatever suits us best. So in this case, on Tuesday or Wednesday, these will be the days that we're going to stalk for entries. So we have mid-range and we have this bullish OB right at the EQ, below the 50% at the discount, optimal trade entry right here. It tapped the 0.62. So this is where we want to be entering a long position. Ideally, we wanted to enter around the breaker, but if it shows you signs of strength within this level below the 50%, you can enter right here. So we enter along with our stop just below this OB, and our target is the liquidity intra-week. So our liquidity is now resting above Monday's high, and from that point on, we have a fair value gap right here and a bearish OB. So this will be our next target, and these highs can be measured as well, but I like how we have a fair value gap and a bearish OB here. Now you can see if you miss this initial push up and you're like, shit, I want to get in as well, you want to be entering and watching price near Monday's high. So for an entry near Monday's high, we want to see a low being formed. Then we want that low being swept, followed by a shift in structure. So right here, we got equal lows resting above Monday's high. We sweep those lows, then we have a bullish structure break right here, and we can enter as soon as we sweep these relatively equal lows. And if we zoom in to lower time frames, you'll see there's a demand here. Let's see if I can get it back. So let's crunch it up. Okay, so we got equal lows right here. So we want to enter below them. Our stop can go below these two lows at Monday's high, and our target remains the same. So we still have this fair value gap and this bearish OB. So this is our target. So our initial trade was based off the EQ of Monday's range at a bullish OB, targeting Monday's high and onwards. And as soon as we missed this trade, let's say we missed it, there was another scenario with these two equal lows being swept, followed by a break-in structure right here, a bullish mark structure on lower time frames. We got a nice wick during New York open. We got filled, stop above these lows, and then we can target the fair value gap and this OB right here. So that's the bullish scenario. Another great example is this. So we got a small tight Monday's range to work with. So again, we want to be entering around Tuesday or Wednesday for the low of the week. And we know we have clean highs right here. And if we look to the left, what do we have at Monday's low. If we look to the left, what do you see right here? I'll get rid of this. We got a breaker, right? Up close candle. We took out this low into a key level. Price then pushed through, no resistance. So we mark this out. We got a breaker below Monday's low. So as soon as price sweeps the liquidity below Monday's low, you can be a buyer right here. So let's say you want to be a buyer and you want to enter this is a risky trade, okay? So let's say you get filled on this wick and your target is this fair value gap fill into this bearish OB, followed by the liquidity above Monday's high, these equal highs right here. And maybe even into this OB. If you didn't take this setup, what you can do is as soon as price reaches and closes back within Monday's range, you can enter a long right here with your stop below the previous low. And what's your target? Well, we know that Monday's low is being swept into a key level, this breaker. So where's the intra-week liquidity now? It's resting above these equal highs at Monday's high, right? So this is our first target, and then we look to the left and we pull up our fib, swing high, swing low. If we were looking for shorts, we want to enter within this optimal trade entry. So we look for potential targets. What do we have within this region? Well, we got this bearish OB. So we can use this as our target as well. Of course, we missed this little bit, but that's okay. It's a nice 4-hour trade anyway. So that's how I use my well, I can name it my Monday's range, but it's not mine. It's just a universal way of trading. So this is how I use the Monday's range within intra-week liquidity and setups. So I look for the reaction at either the Monday's low or Monday's high or mid-range, and I base my trades off that levels. So let's say for a bear scenario, we didn't get one here, but let's say if we just dumped through Monday's low, we had a couple of candle closes, we pushed up into range low again, followed by bearish breaking structure again, then you can enter a short. It's basically the same as where you enter a long right here on a retest of Monday's high. If you see price isn't able to close back above Monday's low, the high of the week could already be in, and we can enter a short targeting lower prices. And that's how I use the Monday's range. Cheers.